So let me tell you about the value of a secured loan and how it can benefit you in the long run. You see, most people think taking out a loan to buy a car or fix up your house means going straight to the bank or a finance company and paying whatever high interest rate they offer you. But what if I told you there's a smarter way to borrow money, a way to get a lower interest rate, build your credit, keep your savings, and still walk away with a paid off car or home improvement without touching any of those high interest rates financial institutions want to so gladly give you? Let me put you on game. Today I'm breaking down how a secured loan works, why it's one of the most underrated financial tools out there, and how using your own money as collateral can actually put you ahead instead of behind the game. Let me show you what I mean, because this is where it really clicked for me. Most people go get a loan the traditional way. You walk into the bank, you need $10,000, they hit you with a 15, 18, sometimes 20% interest rate. Why? Because they're taking all the risk. That's the part nobody explains. You think that's normal. But when I started using my own money as the security, everything changed. Now, the loan isn't risky for them anymore. They already have the collateral. So instead of those crazy interest rates, you're looking at something way lower, in the 6 to 8% range. Sometimes lower, just depending on who you bank with. And trust me, that adds up. We're not talking about a small difference. That's literally thousands of dollars saved over the life of the loan. So for me, the shift was this. Instead of my money just sitting in the bank drawing interest, I created a new plan and I called it leverage, because it helped me build my credit. Now, a secured loan still reports to the credit bureau just like any other loan. So every on-time payment you make builds your payment history, strengthens your credit profile, helps raise your credit score over time. For someone rebuilding or just starting out, a secured loan is one of the safest ways to show you can handle credit, because the loan is backed by your own money. So you're not just borrowing, you're building a track record that follows you into every future car, house, or business adventure you want to make. At the end of the day, you own the car. You see, that money you borrow from yourself is your money. And when you pay for the car, they send you the title. You see, the purchase is secured by the money, not the vehicle. That means there's no title. The title is in your name. No bank listed as a lien holder. No repo man holding your car over your head. You drive off the lot with a clean title. It's your car, not the bank. Now, here's where the strategy really shows. When you start paying off the loan, you still have your original money sitting in the bank. It never left the account. It stayed in your savings or CD. It kept earning interest the whole time. So at the end of the loan, you walk away with a paid off car, your original money, the interest your money earned, and a stronger credit history. Most people spend their money and end up with zero. With a secured loan, you keep your savings, you get the car, and you build your credit at the same time. That's a power move. Now, I'm gonna tell you something that most people are sleeping on. They have a whole life insurance policy, maybe $50,000, $100,000, whatever. What they don't realize is that policy builds cash. See, every $50, $60, $70 that you spend into that policy, over years, it develops what they call a cash value inside it. So instead of you going to the bank and paying a high interest rate, you might already have access to money you can borrow at a lower cost. That made me step back and think, how much money do people already have that they are not using the right way? And I thought, maybe this video can help. You see, A secured loan is worth considering when you have savings you don't want to drain, you want a lower interest rate, you're trying to build or rebuild credit, you want to own the car outright, or you want to buy something for you where nobody else can come back and take it from you, or you just want to keep your money earning while you borrowed it. Now, that's not borrowing, that's planning. You see, a secured loan isn't about taking on debt, it's about leverage, credit, and control. You're using your money to lower your costs, build your credit, protect your assets, and come out with more than you started with. If you never looked at secured loans this way, now you know exactly why they can be powerful tools in your financial toolbox. Unc out. Peace.